But yeah, as we we're just talking about, what I'm going to call this little video is continuation patterns and reversal patterns. So we've looked at all of the other stuff we've looked at, so, you know, support and resistance and trend lines and candlestick patterns. They obviously form their own patterns. So what we were just looking at here with this one was it's forming a triangle shape with these two trend lines. And whenever the market's getting squished towards an apex, that's when basically all traders pay attention, because the closer to the apex it gets, the closer to breaking out one way or the other it's going to get.
Yeah, okay.
The most conservative approach to trading is to wait for the breakout and then trade it. In this case here, if you'd have waited for the breakout, it was basically over by the time that one candle broke out, and then it's come back down. So you can miss out on that.
Yeah.
But it's a safer way to trade than to just try and guess when it's going to break out. And I'll break them all down into some more individual stuff first, but I just thought I'd start that recording because we were talking about tonight's sort of lesson anyway.
Yep.
Down the bottom here where we've seen it, it's sort of bounced twice off the same level. So we've just drawn in this trend line. The yellow one's a support line, sorry. And that's what they just call a double bottom, which is an indication of the market reversing direction. And it sort of indicates that simply because as the market's trending down, it's forming lower lows, lower lows, lower lows. And then all of a sudden, it doesn't form a lower low, it just forms an even low.
Yeah, I gotcha. Yep.
So that's a good indication that the downtrend has, and at that point, the downtrend has stopped. Doesn't mean it can't continue a bit later, but so we've formed that double bottom. So that's our first indication. And like always, I personally like to have at least 3 things indicating the direction the market's going to go. So the double bottom is indicating to me that the market's going to go up. And then, so it's gone down and then it's formed this lower high, an even low, and then it's sort of paused there a bit, but then it's broken out up here. So it's formed a higher high. So that's the second indicator.
Yeah.
High, and then we formed, you know, the higher low as well. So that's basically 3 indications. So that's full indication that we're now in an uptrend.
Yep.
If we're looking at this particular market now, hang on, I might just get my son to shut up for a minute. It's usually the dogs, but the kids tonight. So where were we? So we've got at least 3 things indicating that the market's going up.
Yep.
And where I would have placed a trade would have been, I would have been waiting for us to form a higher high. So when we form the higher high,
yep,
I've been waiting for confirmation that it's then formed a higher low. Okay,
yeah,
and that confirmation comes in the form of our different candles here. So we've got that red one, then we've got that hammer,
yeah,
which is an indication that it's going up, and then we've got this bullish engulfing green one, and the 3 of those together form that morning star constellation, indicating that the market's going up. So for me, when this candle here closed, that's when I was, you know, given good indication that that was the bottom and then it was going up again. And because that bottom was higher than the last bottom, I'm now going to call that an uptrend. So right there, if I draw a line, right there is where I place the trade. And that trade's still going at the moment. I'm just waiting to see how much I can get out of it.
Yep.
At the moment, it's still a decent profit, not like huge, life-changing profit, but a good profit.
Yeah.
And so just following all the lessons we've done so far, that's where you should have placed a trade if you were going to. And that's pretty much what you said anyway.
Yeah.
And now the next trick for a trader is to work out where to close that trade, where to take your profit.
Yeah, that's
It's obviously really, it's easy to get greedy and just want to ride it right up until Ethereum's worth $100,000, or at least gets back up to an all-time high. You know, so it's easy to get greedy. Sometimes if you do that, you end up getting into a lot of profit, but because you're hoping for more, it comes back down and you miss out on it. So in this particular example, what would I be looking for in terms of where to take profit? What I was always taught was when you're trying to work something out, what you've got to do is you've got to look left to see what the market's done previously.
yep.
So here, you know, we were forming this downward triangle, but it's broken to the top pretty seriously, broke up, but then all of a sudden it stopped and it's got pushed back down again. Okay, so because that was a really big green candle, it was really strong push upwards, but then it was fairly quickly pushed back down again and that downtrend continued. So that could happen again. The market might be in a little bit of an uptrend now, but that's no reason it's going to continue indefinitely. It could definitely reach this level again and get pushed back down again, because for some reason there was a lot of selling pressure right here, which isn't too much different to where, like, it's just a little bit lower, but we had selling pressure here. The market broke up strongly, but then it got pushed down again when it reached there. So somewhere between there and there is strong selling pressure. So we'll watch the market, and if it looks like bouncing somewhere in this green shaded area, which will be our resistance area, that'll be a good time to get out.
Yep.
So there's two ways you can do it. If you're not able to monitor your trading, you could just place a take profit line a little bit below that. A little bit below, simply because just to make sure you hit it, because you'd hate to come home from work and find that it had come up to about there and then turned around on you. I mean, if you had, if you put this up here where the resistance zone is, and then you come back from work and you find the market had reached about here and then come back down on you. So just to be safe, I always put it a little bit lower than where I'm considering resistance to be. And then you can just leave it.
Yeah, I found that too with even with my buy trade. Like I was watching it over the last couple of weeks and putting figures in my mind where I thought it would probably hit, and just noticed that generally it'd be, you know, it might only be $1 or $2, but it didn't quite make it.
Yeah.
So you're better off just, yeah, like you've said there, just go a little bit on the cautious side.
Mm-hmm. So I'm going to, in a future little lesson, I'm going to go through, one of the lessons will be on pretty much what we just talked about now, where to enter and why to enter, and then where exactly to place take profits and stop losses, and when to get in and out of the market. So that'll be a whole lesson unto itself. But I thought while we're on the subject of Ethereum and you'd already made a profit, which is awesome, I just have a quick chat about that. So the other option is, if you're able to monitor your trading, you could just watch it here. And if it just seemed to be powering up, you could just let it. You could also, some trading platforms allow you to have a trailing stop loss. So your trailing stop loss will follow you up, or you can just manually move your stop loss up. And every time it looked like maybe bouncing in this resistance zone, you could put the stop loss pretty close, so that if it did turn around, you'd hit it, and you'd still take good profit. But yeah, that's basically Ethereum, and I think that's pretty much exactly how you made your profit there, and also what you would have done here if you didn't have to go to work.
Yeah.
I just quickly Googled all this to make it look technical, but what we're really talking about tonight is continuation patterns. And when the market forms these patterns, it's an indication that that trend is going to continue. So this is just called a flag. So the market's moved up strongly, which will be the flag pole. And then we've just got a nice little, you know, an even-sided channel. It can be coming straight across, or it can be angling down. And that's just sort of the market consolidating. And then it'll just break up and continue up. This one here, because it's like a triangle shape, it's just what they call a pennant. So hang on, we can just make it bigger, can't we? So, and we can read it now. Because the market's come up strongly and then it's forming that triangle, the most likely scenario is that it will break to the top and keep coming up. That's why it's called a bullish flag, a bullish pennant. A bullish falling wedge is the same as a pennant, really. It's just sometimes it might not quite be coming to an apex like the other. And then you've just got the opposite here. If it's come down first and then it does the same thing, it's most likely going to continue in the direction that it originally came from.
Oh, yeah, that makes sense. Yep.
So that's just continuation. And all it really is, and I'm going to bring up TradingView and we'll find actual examples of it because it never looks this perfect. So you can imagine the market's pushed up really strongly.
Yep.
And you'll see it all the time. It'll shoot up one way, and then it'll just sit there, not doing much at all for a while, and then it'll go again. Obviously, the market just can't continually go in one direction. So you'll have a lot of, like in this example, you'll have a lot of buying pressure, which will push the market up. And then when the majority of that buying pressure is over, the market's just doing this, which is just consolidating. It's sitting there, we're waiting to see whether the selling pressure is stronger than the buying pressure and all of that. Obviously, if this continues for long enough, it becomes a downtrend. And then, I mean, a flag, the flag part of the flag can't go for too long, otherwise it's invalid anymore. But
yeah.
And a bullish, like a pennant pattern where it's forming a triangle, I find even more interesting and exciting because like here, if this just continued, the market would end up just going down, 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 and down. So it could just continue that and go down. But when this little pennant shape's forming, so we've got a higher high, a lower high, a lower high, but we've also got a low, a higher low, and a higher low. So it's getting squeezed in there.
Yeah.
So pretty soon, it's got to make a decision and go one way or the other. Whereas this one, I feel in theory could just keep going for ages. This one here, it's going to have to break one of these trend lines eventually and then shoot up. So I like those little, whenever the market's getting into an apex of some sort of a triangle or a wedge, that's definitely worth paying attention to.
Yeah.
Now these ones are reversal patterns. So the other ones indicated that the market was going to keep going the way it was previously going. This one indicates that it's going to turn around and go the other way. What we talked about before with Ethereum was that double bottom, and that's simply because it's formed support. So it's going to bounce off that and go up. Over here, we've got a triple bottom. That just simply means that the support that it's found is even stronger because it's bounced off it 3 times.
Yeah.
If we have a look at this one, and they call it head and shoulders, and they've got some special drawing tools and everything, and a lot of people tend to think this sounds a bit technical and everything. But if you can imagine the market's been zigzagging in an uptrend, okay? So we've got a higher high, higher high, higher high, higher high, and then all of a sudden we get a lower high, and then we get a lower low, lower high. So all that is doing is showing the very top of where the uptrend stops and the downtrend starts. And that just forms, a head and 2 shoulders. And this blue line is what they call the neckline.
Yeah.
That's because the market's bounced there and the market's bounced there. So when the market breaks through that neckline, which is just a form of support, that's the indication that it's a fully head and shoulders pattern and the market's reversed and it's going to trend down.
Okay.
Now, and obviously you've got the reverse as well. So you've got the inverted head and shoulders. Now we've got rising wedges and falling wedges, or they might be, I usually call them ascending wedges and descending wedges. Now, if we remember the pennant shaped one, how the market shot up and then it consolidated and then continued the other way.
Yeah.
This one's very similar. It's come up, it's consolidated, but it's going to come back down. And the difference between the pennant and the rising wedge is the fact that on the pennant, the top of the triangle and the bottom of the triangle were either like a symmetrical triangle, so the top one was angling down and this bottom one was angling up, or they might have been angling down a bit as well. But this one here, we can see, I want to just go back and explain this one again. So we've got, because the bullish pennant is very similar to the ascending wedge that we're looking at on the next slide. With this one, it comes up, but then every time it comes up, it's forming a lower high and a lower high.
But a higher low.
Yes, but on this one, it's coming up and it's forming a higher high, higher high, and a higher high. So it's still continuing up, and the bottom ones are still the same as the other one, but so the whole wedge shape is angling upwards. That's really the difference. And that's an indication that every time the market pushes up, it's getting stopped. It's pushing up, it's getting stopped. I mean, it can break to the top and keep going up. There's no exact science, but the most likely scenario with the rising wedge is that it will break and come down. And then you've obviously got the same, but up the other way. And then we've got the expanding triangle. They call these wedges as well. It's just sort of the opposite way. So it comes up, and as it expands, it gets bigger and bigger. It's also just a reversal pattern, so it can change direction as well. I don't hold as much faith in these ones myself as these ones, because I tend to think these ones can also break upwards. But as I said, it's always best to wait for that breakout, and then you can trade. What other ones was I going to talk about? I mean, look, if you can have a look here, it's just a quick Google search. There's so much on just different reversal patterns and continuation patterns. And as you know, I want to keep my videos a little bit short, so I don't want to make them too long and technical. But let me just clear a bit of stuff off here. Okay, let's just find a good example and we'll talk about it. It's always hard to find a good example right when you want to talk about it. All right, this one I'll do first. The market's had a good strong push down here, and then it's come back up. So I'm going to draw just a little line connecting these two high points, and a little line connecting this low point and this low point. You'll have to forget that all of this is here. But in this instance, where's my drawing tool that I want? I just did a lesson on trading view. Now I can't do it. That's all I wanted. So the market's strongly come down there.
Yep.
So that's like the flagpole. I mean, this is an upside down one, but that's the flagpole, and then that's the flag. So a flag is just a continuation pattern. So because the market's come down here, and then it's consolidated on the flag area, and when it broke out and came down quite a ways.
Yep.
How far is it likely to break out? They do like to say that the distance that the market's previously moved in a nice big drop. So from here to here, so how far is that? So from here to where the flag started was 10%.
Yep.
So when the breakout happens, you can expect 10%.
Hello. Yep.
And in this case, we got about 8%.
Yeah.
8%'s pretty good though. I mean, in this case, it sort of broke out and then we only got really one more candle down. So you probably wouldn't have got all 8%. But when you're sort of doing trades at 10 times leverage and 8% profits, 80% profit on that trade. So that's still good. This isn't a perfect example because it's quickly bounced and came back up again. But I mean, that's what trading's like. Is there's no or not always a perfect scenario. Sometimes it works out exactly how you like.
Yeah. Well, it's about averages, isn't it? Getting average on your side, the wins.
Yeah.
Basically. Know enough to.
Did I just delete that? Did I? Not to worry. Oh no, there we are, just there. I'll get that off the screen. And so another example, you can see the market's been dropping down here nicely. But then it's bounced, it's formed that morning star constellation, so that's pushed it back up. So what I'm going to do is sort of, join that one across there. And from the bottom, I'm going to draw, a line up there. If you'd have drawn this line early, it would have had to touch that green one.
Yep.
So that little wick sticking out there would have just, you would have been thinking it was doing something then, but it came back down pretty quick. That's why we like to wait until the candle closes before making any decisions. So
Yep.
it can just flick up quickly and that doesn't mean much at all. So what we've got here is we've got the flagpole, and we've sort of got a pennant shaped one coming here because it's coming into the apex, and that's a continuation pattern. So the market's been coming down and then it's consolidated in that pennant shape, and the most likely scenario is that it breaks to the bottom and keeps going down.
Which it
And
did.
in this case, once it broke out, and then sometimes they say you wait for the retest, so that it's broken out of that trend line, and then it came back up and retested it, but it still didn't go up and it started coming down. So where you would place a trade would be, where this red one started, right about there. Right about there. And that would have been a sell or short on the market. And if you'd have done that, you would have been able to take profit from there right down to there, which would have been 8% profit as well. Like a lot of people, like this is the way I trade, sort of on the hourly time frame a lot, and taking 8% profits at 10 times leverage. So if I, put $10 worth of capital up, I end up making $80 out of that.
Yeah.
That's not too bad at all. Other people will trade on the 4 hour and the daily a lot more, and they'll be looking to take, they'll be placing smaller trades, but looking to hold them for, weeks, if not months, and not just taking 8%, but trying to take 40, 50, 80% profit, especially in the crypto market, as at the moment it's quite low in value. And at some stage it's going to, like Ethereum at the moment is worth $1,900. All-time highs around about 4,300. So at some stage this is going to double in value, if not a lot more. So if you can sort of pick when the market is at the bottom, which perhaps it could be now, that could be the indication that it's at the bottom, but we'd be wanting to look on the higher time frame for a longer term view. You can get a trade on now, and you can put a trade on, hoping that this is the bottom. And once it's in big profit like this, you could move your stop loss up above the entry point, so you can't possibly lose money on that trade now. And then you can just sit on that one. And if the market just keeps, you could just ride that trade all the way up until Ethereum was worth over $4,000. And that could be a really big profit. In the meantime, though, you could be doing these little 8% profits as you go along. You could be taking little trades, taking little profits. If it looks like trending down for a while, you can do some shorts, take some little profits that way. And all the while you're doing that, you can leave that one long-term trade running for long term.
Yep.
So you'll probably see, I don't know if I have or not, but I might just bring up the Ethereum chart that I usually use and see what drawings I've got all over it. You can see I've been, as I said, I like the little wedge shapes and everything. This would have been on the 1 hour. So this one here, I'm looking at, sort of got a flagpole, and then we've got an ascending wedge as well, which can be a little confusing, because an ascending wedge should mean that the market's going to come back down. But because it's on top of a big flagpole like that, it sort of can almost be like a pennant as well. Or this one's angling quite steeply upwards. So I was betting on this one breaking to the bottom and continuing a downtrend. It didn't happen. It broke up, but it didn't break up for long, and then it did do the downtrend. So that's what they would call like a false breakout. Doesn't really help us, if you're waiting for a downtrend that can break up. And then once all this happens, you're no longer real sure about the wedge shape that you've drawn up. So you may miss that. I still did trade down there and take a little profit on that one. And then, it's formed a double bottom and it's gone back up again. But this was a very good pennant one, actually. And I did take, actually, I remember this week, this was a really good week for me. We had the flagpole and the pennant forming. The pennant's also a descending wedge. A descending wedge, it should break upwards. And because it's also a pennant, it should break upwards. And so when this one here started and it looked like going up, I think I got a trade on about here. And I took that pretty much all the way up. And this was a nice big trade for me. And the market went right up to there, but then it started coming down. And so I closed out my trade about there. That was 6.5% profit. But then it started forming this little triangle here, just consolidating again. And so you can see this was a big flagpole, a nice tight little pennant, and then it continued and broke right up again. It did pull right back and then kept going up again. But yeah, it was going really well. I got a trade in there. I got out of that trade. I got into another one here, got out of it there. Whoops. And it was like 3 trades in a row I did that just worked out perfectly for me. So that was a good memory, that one. But yeah, so that's my actual drawings on my charts there. Sometimes I do lots of drawings and don't actually place trades. I'm just trying to follow exactly what's going on. You know, sometimes I even write in higher, high, higher, 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 high, so I can remember that. But what I wanted to do, let's come to here. This was, whoops. I'll get back there in a minute. Okay, so this was the all-time high for Ethereum. Back in May. So you can see a big uptrend. And it was very easy to predict, knowing what we already know, that the uptrend was over. I mean, everyone's talking about crypto going to the moon and everything, but all of a sudden, you know, we got higher highs all the way up here, and then all of a sudden we've got a lower high.
Yeah.
And
a lower low.
A low and a lower high. So, you know, at this stage, you know, perhaps you still saw this little drop and you did a buy order, you bought some crypto here, but when it turned around here, and I know I did have some trades in the long position still, but I closed them out here at a little bit of a loss because I could see that the downtrend was starting. And as you can see, it become a very steep downtrend here. And still, if we're looking on the 4-hour or the hourly time frame, it still really is a downtrend, you know. So we've got big drop. You know, so we've got a high point and we've got a lower high. That's sort of an even high, but then we've got a lower high and like a big zigzag down, but back up to here. That's another lower high.
Yeah.
You know, so if you're looking at the 4-hour time frame there, there's not much indicating that the market is in an uptrend. Well, it simply isn't. On the 1 hour time frame, it is just starting an uptrend, but that would have to continue for a fair while before it looked like that on a 4-hour time frame.
That's right. Yeah. So going on the 4-hour time frame, yes, it's rising at the moment, but it's still not going to. It's not going to go. You wouldn't think it's going to go a hell of a lot higher.
No, well, you don't know. You'd assume the only slight indication that it may have found the bottom and is going to go up is this. We've got 1, 2. So we've got a double bottom. So it has formed, and it also bounced here as well. This initial drop that was only a very quick flick down there and back. You could have blinked and missed it. So basically 1 or 2, 3, 4 times it's been bouncing on that support.
Yeah.
So the market's never been below that support since March, earlier this year in March. So it's been quite a while since it's been this low. And last time it was this low, you know, it was just in the middle of an uptrend and it just kept going up anyway.
Yeah.
What we have seen now, like I'm hoping, because I hold a fair bit of Ethereum, so I'm hoping that it's going to go into it's found the bottom and it's only going to go up now. And that's a pretty good indication because it's bounced 3 times. Like it's come up a long way, but it still couldn't go below that. And same again here now. But I wouldn't be willing to put, you know, all of my Ethereum on a long position at the moment.
No.
Until we, you know, if it comes up, once it breaks this high point here and becomes a new higher high, and then I'll look for the next higher low, that's when I'd be willing to put on a really big trade and trying to ride it right back up to the all-time high.
Yeah.
I was going to say something then, but I forgot. This is what I didn't do yet. The whole reason I brought up this chart. Seeing we are talking about, I'm going to go back to the hour now. So
No.
all right, so just talking about reversal patterns, they have this one specific one. Head and shoulders pattern. And so you'd take this low point here and you draw it up to that high point, down to the low. You could go to there or there, just because that's just a wick, a quick wick. I don't worry about that. Up to the high point. I just put it in the middle of the two same high points, and then down to where that one is and up to there. And then when the market actually, might have been better if I started here. Let me start again. Okay, so the market's in an uptrend. Let's take this point here, up to there, down to there, up to the high point, the low point. It's not a perfect one, but that's your head and shoulders forming. And it's not a confirmed downtrend until you break the neckline, which the neckline's on an angle. You must be a bit of a hunchback. But once the market sort of dropped below that line, then it was in a downtrend. And as you can see, that was actually the case.
Yeah.
But all the head and shoulders indicates is we've got this uptrend, and then the uptrend stops, and we get the downtrend happening. So that's, I just wanted to mention head and shoulders because some people tend to think it's really technical because it's got its own little drawing tool.
Yeah.
But it's really just showing you that an uptrend stopped and a downtrend starting. I think as you start to learn a bit about trading, you realise that it's not too technical. There are some actual rules to it all and everything. Like even here, we can start, drawing some lines. If you just connect up high points and low points all the time, I've got too many lines on here now, and see what sort of shapes they form. Even if you don't really know what you're looking at yet, you just have a look here and you start drawing some lines and connecting them up. So we've found a or you might have just drawn it from there and across to there and drawn that one up further. They don't always make it all the way to the apex before breaking out. It's been coming down. And if you connect up the first two high points and the first two low points, then just like magic, it just starts bouncing off the trend lines themselves. So I would have drawn this bottom line, not yet, but when this one formed, the market might have been here somewhere, and then I would have connected these two low points, and it does look. But I know this is in hindsight, it's very easy to do, but that's where I would have drawn it. And then just like magic, it bounced when it hits it. It bounced when it hits it. And obviously it can't keep doing that, but eventually it broke out.
Breaks out, yeah.
And when it does break out, whenever, like particularly when it's getting close to the apex of a triangle, when it does break out, you'll find it breaks out seriously. It won't just be like little tiny candles slowly getting further and further down. It'll be like some serious movement one way or the other.
Yeah.
If we have a look at some of the other ones that I've already drawn, which I did draw while the market was where I drew it. Like this one, I drew the triangle, and look, when it broke out, it did it really seriously. It's not like, see, we just got all these, each candle's an hour in this case. So we just got little tiny candles, but when it breaks out, it moved that far in 1 hour. Look at the next one, little candles while it's consolidating in the triangle, but when it broke out, bang, it did it with a serious one.
Yeah. Yeah.
Up here, I mean, it's not as serious as those other two, but compared to the little candles just prior to it, that's still a much bigger one. We can do the same here. It's consolidating and it broke out, did so seriously. So if you can catch those breakouts, it's usually a really decent profit,
Yep.
but also quite quick, you know, in
Yeah.
like, for example, this one, and I'm going to show you this one because I did catch this one perfectly. I think we measured it just before. And say, like, let's say 7%. But I made 7% at 10 times leverage. So I made over 70% profit in basically like it just somewhere between 1 and 2 hours. So it was just bang, you know, you place a trade, you go and have your shower and dinner and come back and you've made 70% profit. Other times, you know, you might have placed a trade here and taken profit here. So it might be a bit bigger profit, but you've had to wait 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 hours to do it.
Yeah. Yeah.
Not that you'd be upset if it took you 12 hours to make 100% profit.
No.
These little breakouts are just quite often really quick.
It's interesting looking at the trend at the moment, the current trend with Ethereum.
Yep.
Like it, and again, it depends on whether you look at an hour or 4 hours or.
They say the higher time frames give you a more accurate reading.
Yeah.
And that's true as far as long-term trends go. But if you want to trade and like on a daily, you're looking at holding a trade for weeks, most likely months. So you're looking at a long-term trade. But so in the long term, the market may be trending up. But in the short term, if you're down on an hour time frame or even smaller, you can catch a whole heap of little downtrends and make a heap of little profits, which could end up being better than one big long-term profit. It just depends on your trading style, how patient you are, how much time you've actually got to put into it. I mean, if you get the smaller the time frame you're following, the quicker the trades play out and everything. So the quicker you can make profits, but you do need more time because you've got to be, like something that's, you got to do the same amount of work over the course of a couple of hours instead of over the course of a few days.
Yeah, that's right.
Sort of condensing it all down into a shorter time frame, just depending on what suits you best.
Yeah, if you were looking at the 4 hour time frame for Ether at the moment, you would, well, I wouldn't say you would. I would think that it's getting ready to be at its high point for this run. If you know what I mean?
If we're looking on the 4 hour, did you say?
Yeah.
I might as well put it on the 4 hour if we're talking 4 hours. Yeah, so this is back on my chart that I do have drawn up.
Yeah, so if it depends on how far how far do you bring you see how you've got all your lines there.
Yep.
And if you look at the last, where you've started that last one, you would say that, yep, you know what, it's actually not that far. And we probably should see a turnaround.
Yeah, you may do. It just depends whether this downtrend is continuing.
Yeah.
I mean, so that's what you could do if you were trading. It's in a downtrend on the 4 hours. So the preferable way of trading is to look for opportunities to short, trade down.
Yeah.
So because it's already bounced 3 times on this support line,
Yeah.
I'd be very careful about taking a short. I'm also very cautious about taking a long just at the moment as well, because it is trending down.
Yeah.
But yeah, as you said, it's getting close to this trend line I had drawn in.
Yeah.
And if it shows, if I got an evening star, inverted hammer type stuff happening here to look like it's turning around, then it'd be worth putting on a short and seeing how far you can come down. If the downtrend is continuing, then it could break this support and then keep going down.
So you wouldn't look at where you started your trend line there. You wouldn't
this one.
You wouldn't look at the peak before that as the start of your trend line.
Yeah, there's going to be an overall trend line as well. So from here, you would go from here, and you'd connect those two together.
Yeah.
But that would have sort of already been broken and everything.
Yeah.
You can then move it up to this next one as well.
Yeah.
But then we're already breaking through that. So for me, like originally I did have the trend line connecting this one and this one.
Yeah.
But it's so I had it like that.
Yeah.
But here when it breaks through it, once it breaks through that trend line is now no longer valid because it's
okay, that answered my question. Yep, cool.
So now and I move my trend lines around a little bit. You don't want to move them too much, otherwise you're trying to make the market do what you're hoping it's going to do. You've always got to be cautious with that, because if you draw enough pictures and you think about it and manipulate your drawings enough, you can make it look like how you want it to look.
Yeah, that's right.
You got to try and do it without emotion. Just draw it up, and then place trades based on that. Not draw it up based on the trades you want to place, if you know what I mean.
Yeah.
How do you know where to start the trend line in the first place?
Well, after
originally at the top of this was an uptrend. So at the top of this, I would have drawn one from here, connecting this second high point. So just the high point, and then the next high point, you just connect them on and draw that trend line forward.
Okay.
As I said, that's what I did originally. But then when the market jumped up here, it broke through that trend line. So then that trend line is no longer valid.
Yeah.
So then I've drawn a new trend line, just connecting the two most recent high points. So this one, and I've followed through.
Yeah.
And now I'm just watching, and I also had the ones on the bottom here. And I was hoping it was going to bounce here so I could start trading up, just because that's what I wanted to do. But I know better than to just trade on what I'm hoping for it to happen. So I'm just waiting to see what's going to happen. I didn't really get any confirmation that it was bouncing.
Yeah.
Like it stopped and we got one green one, a little one, but there's no actual hammer. There's no morning star pattern or anything like that. There's no bullish engulfing. There's just nothing to indicate it there. So I didn't place a trade, and then it just dropped down a lot further. But since then, we've had some good indication that the market's, trending up, at least in the short term. The next sort of point of interest will be when it gets to this line. If it breaks through that, and then, if it forms a new, goes higher than this point here, if it does that, then I'll be pretty confident that we are in a bit more of a serious uptrend.
Yep.
And then after that, this will be the next point of interest if it can break through this resistance.
Ooh.
So if it breaks through this one and I place a long, I'll be looking to try and ride that trade all the way up to here.
Yeah.
But once it approaches this previous resistance line, that's when I'll get cautious. I mean, if it can go higher than that, then I'm sort of confident it's in a good uptrend. But this will be the next danger zone for a long position, because this is where it turned around last time. So I'll either take profit just before it, or I'll, just really monitor it closely and see what it's going to do.
Yep.
So yeah, like I've said in all my other videos, and in this one, there's so many. These are just the very basics of the continuation patterns. There's a whole heap of other ones and more technical ones and everything that I won't be going through, but it just sort of like this video will just be to try and open everybody's eyes to the fact that certain configurations and patterns that the candles form can definitely give you an indication of whether the trends are going to continue or whether the trend's likely to reverse. But you seem to be grasping that concept quite nicely.
Yeah, yeah, and yeah, every little session helps. That's for sure.
Yeah, I mean, when I first did some trading lessons, I was quite surprised with, like they call it technical analysis, and I was quite surprised by how not technical it was. Like in theory, it's all easy, makes sense and everything. And
yeah,
most worthwhile trading education, they really delve into the psychological side of it, because that's, like I know people that can draw up the perfect charts, do the perfect technical analysis and tell you exactly what it's going to do, and they're right so often.
yeah,
But when it actually comes to putting their money on the line and doing it, they fall apart.
yeah.
Simple as that. And the other way, I know people that aren't very good at technical analysis, and luckily they aren't on the call tonight, so I don't have to point them out. They're not very good at all. They understand the basics a bit, nothing technical at all, but they're very good at risk management.
Yeah,
So they'll place trades that sort of, if they've got 2 or 3 indications, they'll place a trade, but they'll put stop losses and take profits in the appropriate places, and they understand that they're going to lose some, they're going to win some, but they don't lose it when it comes to putting their own money on the line. They stick with what they've learned, which may not be much, but they stick with it. They stick with the plan and let the trades play out. They win some, they lose some, but in the long run, they end up ahead.
yeah,
Which is quite amusing, because other guys know so much more, but they can't consistently end up ahead.
yeah. When you
Anyway.
say earlier there, you said you put on, you might put a trade on that's for a long trade.
Yep.
And just let that play out. And in the meantime, you're doing your little short trades.
Yeah.
So, yeah, that's a little bit what we're trying to get our head around as well. Like if you've got...
It depends on what... So I think I know where you're going with it. Depending on which platform you're trading with.
Yeah.
Some will need to have longs and shorts going at the same time.
Yeah.
Like Binance futures, it doesn't let you do that. If you had a long and you took a short as well, it's going to average them out or reduce the position. But you have even on Binance, you'll have Binance futures perpetual. Then you'll have the quarterlies futures as well. So they're 2 totally separate charts, even though they're both Ethereum US dollar. They're 2 separate trading charts.
Yeah.
So you can, like, just quickly, like on Binance futures, do you trade on Binance or?
No, BTC at the moment.
Okay, well, they're sort of similar. And whenever you're trading a futures contract, you've got the perpetual one, which they just charge a little fee, every day, sometimes a couple of times a day. So that can be Ethereum USD or USDT. And then you've also got the quarterly futures contracts, which only charge you 1 fee once. It's a bigger fee, but they charge it when that contract ends. So they're generally quarterly. So every 3 months that contract will end. So if you've got trades open at the end of that contract, they'll get closed then and there. But you only pay the fee once, either when you close your trade or when it reaches the end of that contract. And so that's the quarterly ones are good if you want to do a long-term trade, because it works out cheaper in fees. So you can place a long there and leave that run for 3 months. And then on the perpetual futures, you can do some little shorts as well as the market drops down now and again.
Yeah, okay.
I'm going to stop that recording now.